Yes, I know. I spoke to, I did not, but Ujjwal or Umang, I don't know.
It was
He
Umang,
pinged
ma'am.
me. Umang, yeah. He asked me. Yes. All right. Presentations you have prepared, huh? Everybody is presenting, huh?
Like, ma'am, our group is ready.
No, 1 second. Everybody is doing a presentation, PPT.
Ma'am, our group is ready, ma'am.
Mm.
We can do, ma'am. Start, ma'am.
What is the group number?
Group number 10, ma'am.
Mm-hmm. Okay. Huzaifa, Sumant, Dheeraj. But this is 10, no? Your name is
No,
not
ma'am.
here.
Group number 8. Check in group number 8, ma'am.
8.
8. Okay, okay.
He said 10, so I was checking. Okay, Pratham, Kunal, Lakshay, Darshan, Umang. See again.
Yes, yes, ma'am.
See.
Ma'am, is there any difference in marking of marks if we do it in online or offline?
That's what I'm thinking. It won't be like that, but then, as I told you, yes, I want to, have this offline only. So that, I can able to observe and give marks. It's only for today, no. Why is that we are rushing? Let us just concentrate on the other topic and then we
Ma'am, it
can go.
may be tomorrow also.
Should we do it tomorrow? Presentations?
No, ma'am, it may be tomorrow also because in the newspaper it has given that 3 days.
Okay, right.
If we delay from today again.
Hmm. Okay, then if your group is ready, Umang, how many groups are ready? First of all, tell me.
Ma'am, two groups are ready, ma'am. Umang group and our group.
Okay, okay, Umang, start.
Yeah,
He
okay,
was
ma'am.
waiting. He pinged me. He asked me. Huh? He said we will do it today. Okay, let us do. But I don't have registers. I'll mark your marks somewhere. No problem. You can go ahead now.
Yes, ma'am. Ma'am, you could see the screen, ma'am.
Is it prepared or it is available, easily available slider?
No, ma'am, I have prepared it, ma'am.
Okay, go ahead.
Yeah, okay, ma'am. Good morning, everyone. Good morning, ma'am. I'm Umang Agarwal, roll number 62. And we as a group are Pratham Tanna, roll number 9, Lakshay Jain, roll number 18, Darshan Jain, roll number 24, and Kunal Jain, roll number 12. So the topics we have chosen are definition of standard costing, which will be explained by Kunal Jain, types of standards and standard costing, which will be explained by me and Lakshay.
Next slide, next slide. I just
Uh,
want to see.
okay, sure, ma'am.
Yeah.
Okay, so Kunal, you can start.
If you're doing it online or offline, you just take a print, a group of anyone can take a print and then submit it to me. Yeah, please.
Okay, ma'am.
Right.
Kunal, you can start.
Good morning, ma'am. I'm Kunal Jain. I'm here to explain you about standard costing. Standard
You can
costing is
go to the next slide, Umang.
Yes, ma'am. Ma'am, I did, ma'am.
No, you didn't.
Yes, ma'am. Just a second. What
Yes.
can you see, ma'am, now?
Yeah.
Definitions of standard costing.
Yeah, yeah. Okay.
good morning, ma'am.
Mm.
I am Kunal Jain, roll number 12. I am here to explain you about standard costing. Standard costing is the process of substituting expected cost of a product with the actual cost in the books of accounts. Uh, we can show the differences between the expected cost with the actual cost to show to know the differences between the values of the product.
Hmm.
we can this is an best alternative for the two methods of cost clearing, that is FIFO and LIFO, first in first out, last in first out, where we can where we can keep the record of historical information of the inventory.
Mm.
Thank you, ma'am. Now Umang will continue.
No, wait. What is this first in, first out, last in, first out method you have included here? Can you explain?
Ma'am, it's the process for doing managing inventory. Like FIFO means first in, first out, in which
Managing. Hmm.
the inventory which come first will go first, and
Hmm.
in LIFO the inventory which will come in last will go first, ma'am.
Okay. How does this variance shows impact in this methods?
Sorry, ma'am. Sorry, ma'am. Can
What?
you?
How? See, how does these methods help in variance? Now you said variance is what the actual minus expected, or standard versus standard minus actual. We are saying it as variance, right? Now, how this variance will help in this calculation of material methods? Who prepared this slide?
Ma'am, Umang, ma'am.
Omar, can you explain standard costing definition?
No, ma'am, actually, I have found it on Google, ma'am. Like, this part was not mine, ma'am. I've
Hmm.
asked Kunal to do it. I have
Hmm.
just put the definition and what I have got on Google. I have set him to explain, ma'am.
That Kunal is just reading out the slide. He is not answering to my questions.
Kunal, you want
Ma'am, I
to?
explained, ma'am.
I'm asking, Kunal, how this material calculation, controlling or material method, calculation of material methods, how does it helps in variance or in costing? Next slide. What do we have next slide?
Ma'am,
Umang,
types of standard costing, ma'am.
Umang, this is fourth slide, right? Go to third slide.
Yeah, this is third one, ma'am.
Okay, fourth.
This is fourth one, ma'am.
Go to third.
Yeah, I have one.
The slides are not changing.
Now we are on which slide, ma'am?
Same fourth.
Okay, sorry. This,
Topics, we can see definitions of standard costing, types of standards in standard costing, advantages, limitations, conclusion. All right. So definition you explain. Change the definition. Change it. If you're ready to explain it, do it in a nice way, in a correct way. Because LIFO FIFO methods are material control, right? Material, how we calculate or how we issue materials to the production department, right?
yes, ma'am.
That's different. And now I'm asking how it is related to variance is my question. Then you should be able to answer the question if you're putting in a slide, please. Right? We have different methods, to calculate the materials that we issue to the production department. Now this is costing, right? Can you give me this slide, or the link from where you have copied this?
Sure, ma'am, I can.
Okay. Then go to the next slide, fourth slide. Can you show fourth slide?
Yeah, this is fourth only, ma'am. Definition
Fifth,
of standard
fifth,
costing.
fifth,
This
sorry.
is fifth one, ma'am.
Okay, Kunal, you can go ahead.
Lakshay, you can start.
This is Kunal's part, huh?
No, ma'am, this is
Types
mine.
of standards are Lakshay and me, ma'am.
Two each,
Kunal's
ma'am.
done.
Kunal
Yes,
sir,
ma'am.
the conclusion at the last, ma'am.
Mm-hmm. Okay.
Lakshay, start.
So should I continue, ma'am? Good morning.
Yes, ma'am.
This is Lakshya, roll number 18. I'm going to explain ideal standard and normal standard. Umang,
Hmm.
please change it.
Yeah.
These are types of standard. First of
Yes,
all,
ma'am.
you need to explain what is standard cost and what is standard costing. Now, and then you can go for definition of the standard costing.
Ma'am, but the topic you have chosen is only standard costing, ma'am.
Standard costing types, sir.
Yes, types
Yes,
and
ma'am.
advantages and limitations, ma'am.
Mhm. Okay.
Ideal standard. This represents the level of performance attained when the price and material are most favorable and highest output is achieved with the best equipment and layout, the maximum utilization of resources and maximum output and minimum cost is achieved in an organization, but this is criticized under three grounds. Since such standards cannot be attained in an organization, as it is very difficult to get the best equipment and best man at at the same time in an organization. Second, the variances disclosed would be variances for the ideal standard. This would not therefore indicate the extent to which they could have been reasonable and particularly avoidable. This would be logical method to dispose of these variances, which means it is nearly impossible to get the ideal standard in an organization.
Mhm.
Umang, can you change it?
Yeah.
Normal standard.
Yeah, I've changed it. You can continue.
No, it is not reflecting. That's why I'm waiting. Network issue, I think.
Is it showing now?
Yeah, it's showing now. Normal standard. These are standard that may be achieved under normal operating condition. The normal activities has been defined as the number of standard hours which will produce at normal efficient good to meet the average sale demand over a year. The standards, however, are difficult to set because require a degree of forecasting over the years by the management. The the variances throughout under the system are derived from normal efficiency, sales volume, and production volume. As the sales differ from season or during a particular year, so it is also nearly impossible for the management to achieve it. As for an example, we can take
Lakshay,
during
your voice is not proper.
Clear alone, ma. Clear to me.
the
I don't know
continue, ma'am.
about you. Continue.
For example, we can take for notebooks during
Hmm.
the start of the academic year, the demand for notebooks is very high. So it is not necessary that the company can meet the demand. Among you can continue.
Ma'am, now is it showing third type, ma'am?
Normal standard, I can see. I can see only see. I can see only normal standard. Basic or yes,
Yeah, it has
next
changed,
slide.
Among. You can continue.
Okay. Thank you, Lakshay. Good afternoon, ma'am. So the third type of standard costing is basic or bogie standards, ma'am.
Mm.
So these standards are used only when they are likely to remain constant or unaltered over a long period of time and do not reflect on current conditions. These standards are not useful from the cost of control point of view as they,
Normal cost is changed.
as they consider only fixed costs. It is only a technique which is used with the intention of controlling the cost. For example, the number of labor minutes allowed per unit of product produced would be a basic standard to which the current wage rates can be applied in order to produce a current standard. So this is what the basic standard can be done. Said. Now the fourth one, current standard. Current standards are the standards which are established for use over a short period of time and are reflected to current conditions. They represent current cost to be expected from efficient operations. These standards do not anticipate ideal performance. They are difficult but possible to achieve. These standards represent the state that business is currently achieving or must achieve. Thank you, ma'am. Now, Pratham Tanna will continue.
Good afternoon, ma'am. Myself Pratham Tanna, and I'll continue with the advantages of the standard costing. So, mainly, there are five advantages of standard costing. First, improve cost control. Companies can gain greater cost control by setting standards for each type of cost incurred and then highlighting exceptions or variances. Second, more useful information for managerial planning and decision making. When management develops appropriate cost standards and succeeds in controlling production costs, then the future actual cost should be close to the standard cost. As a result, management can use standard costs in preparing more accurate budgets and in estimating cost for bidding on jobs. A
Very good.
standard cost system can be valuable for top management in planning and decision making.
Yes.
Third,
Can you repeat again? I want everybody to pay attention. He's actually giving a true points. Even they are small. Please try to understand these advantages. Yes.
yes, ma'am. Second point, more useful information for managerial planning and decision making. When management develops appropriate cost standards and succeeds in controlling production costs, then the future actual cost should be close to the standard cost. As a result, management can use standard cost in preparing more accurate budgets and in estimating cost for bidding on jobs. A standard cost system can be valuable for top management and in planning, uh, for top management in planning and decision making. Third point, more reasonable and easier inventory measurements. A standard cost system provides easier inventory valuation than an actual cost system. Under an actual cost system, unit cost for batches of identical products may differ widely. For example, this variation can occur because of a machine malfunction during the production of a given batch that increases the labor and overhead charged to that batch. Under a standard cost system, the company would not include such unusual cost in inventory. Rather, it would charge the excess cost to variance accounts after comparing actual cost to the standard cost. Thus, in a standard cost system, a company assumes that all units of a given product produced during a particular time period have the same unit cost. Fourth, cost savings in record keeping. A standard cost system requires more detailed record keeping than an actual cost system. For example, a system that accumulates only actual cost shows cost flows between inventory accounts and into cost of goods sold. Whereas in a standard cost system, a company shows the cost flows between inventory accounts and into cost of goods sold at a consistent standard amounts during the period. It needs no special calculations to determine actual unit cost during the period. Instead, companies may print standard cost sheets in advance showing standard quantities and standard unit cost for the materials, labor, and overhead needed to produce a certain product. Fifth point, possible reduction in production cost. A standard cost system may lead to cost savings. The use of standard cost may cause employees to become more cost conscious and to improve methods of completing their tasks. Only when companies become active in reducing only when employees become active in reducing cost, companies really become successful in cost control. Now, Darshan will continue with the limitations.
Good. No.
Good, good afternoon, ma'am. My name is Darshan Jain, roll number 24. Today, I will explain about the disadvantages of standard accounting. There are three types of disadvantages that result from a business using standard cost are controversial materiality limits for variances. Determining the materiality limits of the variances may be controversial. The management of each business has the responsibility for determining what constitute a material or usually variant because materiality involves individual judgment. Many problems or conflicts may arise in setting the materiality limits. The second one is non reporting of certain variances. Workers do not always report all the expenses or variances. If management only insists, usually variances, workers may not report negativity expenses to the budget or may try to minimize this experience to controversial inefficiency. Workers who succeed in hiding variances diminishing the effectiveness of budgeting. The third one is low moral for some workers. The management by expectation approach focus on the unusual variances. Management offer focus on unfavorable variances while ignoring the favorable variances. Burkett might believe that poor performance get attention while good performance is ignored. As a result, the moral of these workers may suffer. My colleague Kunal Jain will explain about the conclusion. Thank you.
It's good, but I see now the slide changed to me. I don't know for all how it was.
Ma'am, network glitch, ma'am.
Understand, Kunal.
Sorry, ma'am.
That's okay, no problem. Go to the next slide.
Yes,
What is that? Last slide, I guess.
ma'am.
Conclusion. No? Okay, alright.
Yes, ma'am. Ma'am, you asked me about variances.
Mm.
Yes, ma'am.
I
So the
asked about variance, how it is related to
yes,
material
ma'am. Yes, ma'am.
issue methods.
So, ma'am, the differences between the standard cost and actual cost is known as variance.
Good.
It indicates a deviation from what was recorded in the profit plan. If actual costs are greater than standard cost, management can likely anticipate a lower profit than expected. If actual costs are less than standard cost, management might anticipate a higher profit than they originally planned for. So, after being concluding all the advantages, limitations of this principle, we can conclude that every principle has its own advantages and disadvantages. So, companies should differentiate and choose a better system for costing their product as per their results. If they choose a standard costing system, they will get a standard performance so that they can easily differentiate between them. Thank you, ma'am. Any questions?
Yes, dear students, any questions? Any questions here?
Ma'am, also for my part, ma'am, was the example appropriate,
Good.
normal, standard?
Yes, good now. Good, Kunal. Now, I mean, see, you would have included these points before when we were introducing the standard costing, no? Good.
Yeah, ma'am. I will
Okay,
take
it's
care
good.
next time, ma'am.
It's good now.
Thank you,
It's
ma'am.
good. Thank you.
Ma'am,
Ma'am,
could
can
I?
the next group start?
Ma'am, next group is ready, ma'am. Our
Next
group will do, ma'am.
group. Can you
Ma'am,
do it in 15 minutes? Uh,
Yes, ma'am, we'll
yes,
able to
Lakshay.
complete it.
Yes,
excuse me,
Lakshay.
ma'am.
Uh,
Our marks, ma'am.
now only?
Yeah, you said that you will give
I
now and
don't
then
have
only, ma'am.
registers, man. I'm at home. I'm at home. I don't
Okay,
have
ma'am. Sorry, ma'am.
registers. I'm making a note of it. Okay. But
No
even
problem.
if it is offline, I will not reveal it to everyone. Huh? Please.
Okay, ma'am.
Check. Next group can do it if you can able to do it in 15 minutes.
Ma'am, can you present, ma'am?
Yeah.
Ma'am, is my screen visible?
Yes,
Yeah, yeah,
ma'am.
it is.
From mobile. Huh? Okay.
Turn your phone around.
Shall I start?
Yes.
Is my screen getting blank?
It is
I
not.
got blank in between.
No, no. First you put it in landscape mode and then try to present mode. Now, yeah.
Good morning, ma'am. This is Riya Agarwal. My team members include Meenal, roll number 30, Samriddhi, roll number 54, Akshita, roll number 57, and Nishita, roll number 60. Meenal, slide change.
Ma'am, I think Minal is facing some issue. I'll present, ma'am. Give us a minute.
Okay. Okay. Ishita is present here.
Start, Riya.
Good morning, ma'am. This is Riya Agarwal, roll number 3. My team members include Meenal, roll number 30, Samriddhi, roll number 54, Akshita, roll number 57, and Ishita, roll number 60. I'm here to discuss on definition of management accounting and cost accounting and scope of cost accounting and management accounting. Ishita, we can't see the slide.
Can see, ma'am.
Ma'am, can you see?
Yes, yes, it is visible.
Management accounting. Management accounting is the process of identification, measurement, analysis, and interpretation of accounting information that helps business leaders to make strong financial decisions. Slide change. Cost accounting. Cost accounting is the process of assigning cost to cost objects that typically includes a company's products, services, and any other activities that are involved in the company. Scope of cost and management accounting. Financial accounting. Financial accounting is related to the recording of business transactions immediately soon after the transaction takes place or afterwards the incurring of expenses. The business transactions may be relating to income, expenses, inventory movements, assets, liabilities, cash receipts, payments, and so on. Next, cost accounting. Cost accounting is concerned with the assessment of cost elements, various elements of cost for different business operation and activities. It's a process of accounting for cost which begins with recording of expenses, recording of expenditures, and ends with the preparation of statistical data. This cost data are used in management accounting system for further analysis so as to solve business problems and take quality decisions. Budgeting and forecasting. In order to plan business activities for the future, forecasting and budgeting plays a very significant role. Forecasting helps in preparation of budgets and budgeting helps management accountant in exercising budget control. It's a system of controlling cost which includes the preparation of budgets, coordinating with the departments, and establishing responsibilities. Statistical cost control procedures. It's a process. Cost control is the guidance and regulation by executive action of cost of operating and undertaking. Any system of management accounting is incomplete without effective cost control procedures like inventory control, labor control, overhead control, budgetary control, etc. Statistical methods. In order to analyze financial accounting data, tables, diagrams, and graphs are used in management accounting system. They are nothing but statistical methods. Cost ascertainment. Ascertainment. Cost ascertainment means the determining the cost incurred in ascertaining means determining the cost incurred in producing any product.
1 second.
The
Riya, is this the same slide that we need to see,
Yes,
or
ma'am.
do we have any other slides?
No, ma'am. We have. I have wrote.
Okay.
I wrote only side heads.
Done. I understood.
The cost ascertainment includes collection of expenses, analysis of expenses, measurements of production. Last but not the least, cost audit. Cost audit is the verification of corrections of cost accounts and a check on the adherence to the cost accounting planning. Thank you, ma'am. Over to Akshita.
Okay.
Good afternoon, ma'am. Myself Akshita, roll number 57, and I'm going to talk about nature of cost accounting and management accounting. So, as the first point says, cost accounting is science and art. So basically, it has a systematic body of knowledge, which has certain principle which a cost accountant should possess for proper discharge of his responsibility. For example, he records the product manufacture. The principle of cost accounting can be learned by anybody, and these principles can help in predicting the future. But it's not pure science like maths, chemistry, physics, as its accuracy of costing varies person to person. It is a subjective approach which matters more from case to case. The second point is that cost accounting is art, as it requires the skill and ability with which a cost accountant is able to apply the principles of cost accounting to various managerial problems. The third point is provides measure of control and guidance. It also determines the cost of incomplete work or job in case if the work remains uncompleted. It also provides measure of control and guidance for various levels of management, for example, top, middle, and lower level. The fourth point is cost accounting is a profession. So it is also called as profession because in recent year cost accounting has become one of the important profession which has become more challenging because of two reasons. The first one is setting of various professional bodies. The second one is large number of students enroll in various institute to obtain degree as well as the membership for earning their livelihood. So the whole point says that we need to qualify various examinations conducted by Institute of Cost and Works, and cost auditing is also done by cost accounting. The person who has necessary certificate can only apply for it. So we can say it is a formal education. Next slide. Now let us talk about nature of management accounting. So the first point is provide information. As we have mentioned above, management accounting means to provide information to different levels of management. It's necessary to represent the information in a proper way to meet the managerial requirements. The accounting department is responsible for the collection of data that is used to evaluate some policies, decision, and make changes if it is necessary in the organization. The second point is cause and effect analysis. So one of the main feature of managerial accounting from financial accounting is that it reviews the cause and effect relationship, while the financial accounting only focuses on determining the profit and losses. So managerial accounting explore the reason behind the loss as well as profit and analyze their effect. For example, profit are compared to current assets, sales, share capitals, and so on. So it gives the opportunity to the management to make appropriate conclusion. The third point is decision making. We have already highlighted the main goal of management accounting is to provide the information to the management team in order to facilitate the decision making process for them. The manager carefully studies the historical data in order to see its impact and make some prediction for the future. The fourth one is no fixed rule. So, although financial accounting has various established rules and conventions in providing financial accounts, there are no such norms for the managerial accounting. So, the techniques and tools are the same for both of them, but how you use those techniques depends on the situation. Thank you, ma'am. Over to Samriddhi. Good afternoon, ma'am. I'm Samriddhi Vijayvargiya, rule number 54. As my friend Akshita was talking about nature of accounting, now I'm going to throw some light on advantages of cost accounting and management accounting. So first of all, we are going to discuss about advantages of cost accounting. First, we are going to discuss about the measuring and improving efficiency criteria. So, cost accounting allows for data that enables the firm to measure efficiency. This could be efficiencies with respect to anything that includes cost, time, expenses, etc. And standard costing is then used to compare actual numbers with the industry or economic standards to indicate changes in efficiency. Like, for example, we can see that the cost of producing 1 unit of a product increased from 100 to 110. Now, was this due to an increase in prices or due to an inefficiency in wastage? That is where cost accounting comes in handy. It will help us to measure that thing. Next, we are going to talk about identification of unprofitable activities. Now, just because a firm is making overall profits, it doesn't mean all activities are profitable. And the cost accounting will help us identify the profitable and unprofitable activities of that firm. So, activities that cause the firm losses can be made profitable or eliminated. and this happened due to the cost assignment done in cost accounting. Now, coming to the third point, we are going to discuss about fixing prices. That is one of the advantages of cost accounting. This is one of the most important one of cost accounting because many businesses price their products based on the cost of production of the particular product. And to enable this, we first need to calculate the actual cost of production of these products, and then we're going to further talk about costing makes the distinction between fixed cost and variable cost, which then allows the firm to fix the prices in different economic scenarios. Prices that we fix without the help of cost accounting can be too high or low. Both cases losses are to the business. We are going to talk about price reduction then. Sometimes during tough economic conditions like depression and such scenarios, the prices have to be reduced. In some cases, these prices are reduced below the cost of product. This is to help the company survive that particular tough period. Such decisions management has to take are guided by cost accounting. So that is why price reduction is one of the advantages of cost accounting. Now we are going to discuss about control over stock. This is also another important advantage of cost accounting that helps with restocking and control over materials. The cost accounting will help us calculate the model most idle and economic reorder level and quantities, and that will ensure the firm is never overstocked or understocked. That plays a crucial role. Also, costing allows the management to keep a check over all the raw materials. Sixth point, we are going to discuss about evaluates the reasons for losses. Every firm has to deal with periods of profit or loss, but now they must always evaluate or investigate the reasons of why or what were the actual reasons that they suffered losses. So, therefore, cost accounting will help to tackle the problem or overcome the cause by other means necessary. If you cannot eliminate the reason, you can at least minimize the losses. Cost accounting plays a huge role in determining the cause of any loss. And we can take an example here. Your cost of production is low and the prices are high, but yet losses persist. This can be due to low output levels due to inefficiency, as discussed before. Cost accounting helps us to determine that particular factor. Last but not the least, aids future planning. Now, cost accounting will help you in taking future decisions. One of the biggest advantages of cost accounting that it will help management to have a particular future plan. For any production or selling plans, it is important to have a detailed data about the machines, the labor capacity, the output levels, levels of efficiency of each process, and so on and so forth. And for example, we can discuss here that the management wishes to expand the production to accommodate sales, right? And then cost accounting will help determine if the current machine can handle these levels of production or not. So these were a few advantages of cost accounting. Now moving on to the next slide, I'm going to discuss about advantages of management accounting. So here are some pointers given on the PPT slide. I'm going to start by talking about planning advantages of management accounting with respect to planning. Let me put it down very briefly. The management can prepare the plan and execute the same for effective operation of businesses. And in that context, various functional budgets are prepared and accounting informations are rearranged in department wise, product wise, section wise, and so on and so forth. This leads to a proper planning. Coming down towards control. The actual performance of every business activity is measured and compared with standard fixed or planned one. If the deviations are found that are controllable, the management can then decide the course of action to exercise control. Both standard costing and budgetary control system are highly helpful in to the management in this aspect. And there comes a point where controlling is in their hands. Now, service to customers. Better and improved service by management to customers are assured by this system of management accounting. And what would an organization want if they have happy customers? Next, organizing. The scope of authority and responsibility of Q executives are properly defined and explained under management accounting system. Hence, everyone knows who is responsible for what they are doing and who is not responsible for what. It helps with proper organizing and work in any organization. And coordination. Coordination, I cannot emphasize how important coordination is. It is a process of integrating the various work performed in an organization to achieve the objectives efficiently and effectively. Thus, perfect coordination is required for among production, purchase, finance, sales, and departments like that. And this is achieved through preparing budgets and reports of performances. Improvement of efficiency. I'm going to narrow this down by saying two sentences that management accounting systems may eliminate various types of wastage production, defectives, and other, thereby the workers' efficiency may be improved. Now, summing it up to motivation and communication. For motivation, it helps to maintain high degree of morale among the employees. The reports of business operations are periodically prepared and submitted before the top management. Based on that particular report, the management can find out whom to demote or promote, whom to reward or penalize, whom to keep and whom to not keep. In this way, employees are motivated, and that is where management accounting comes into role. Last but not the least, communication. Two-way communication is followed in an organization. If management accounting system is followed, modified, if management system is followed, a two-way communication happens. Modified accounting information and reports regarding performance are sent to top management for decision making. In another way, assignment of work and responsibilities over employees are communicated to lower level executives. So these were few advantages of management accounting. Now over to my friend Ishita. She's going to take it from here.
Good afternoon, ma'am. Am I audible?
Yes, ma. How many slides are there?
5, 6, ma'am.
But the time will not permit, ma. We'll stop here. We'll continue in the next class.
Ma'am, my slide is only one slide, ma'am. I'll complete it very soon.
We'll do it later, ma. Because I have to take attendance also.
Ria
Okay, it's
will.
already 1:10. It is no problem. We'll continue in the next class. No problem.
Okay, ma'am.
Okay. Okay. Just give your attendance, dear students. Um. So I thought of telling you something.
With regard to what, ma'am?
To this SBT only. You all are there in one group nicely. You're ignoring others. This is what my concern actually. So I'll give you double SBT for you guys. So far, now we have finished. I mean, two groups, right? Group number 10. Sorry, group number 8 and
Ma'am, group
Ma'am, we
number
are left
four,
with more
half.
two.
Yes, ma'am. Two people from our group.
but then I mean I'm just we have started,
Yes,
right?
ma'am. Yes, ma'am. Group
Okay.
number four.
4 and 8, right? Okay, I'll remember. We'll continue. Fourth group we will continue in the next class. Okay. Oh, already started giving attendance in the chat. Very good. Thank you so much. Yes, all the 43 students you kept in the chat box. But I've already taken.